Are you prepared for choppy waters ahead? Global markets are flashing red, Japan's market just crashed. Unemployment is ticking up right here in the United States. It's time to batten down the hatches and get your financial house in order. Don't get caught off guard. We've enjoyed a bull market for years. But remember, trees don't grow to the sky. What goes up must come down. Smart investors prepare for the inevitable downturn. That time is now. Ignoring the warning signs won't make them disappear. The Dow Jones is down over 1,000 points. Japan's Nikkei index is reeling. These are not just blips on the radar, they are tremors signaling a potential earthquake. The time to act is now, before it's too late. Let's explore what's happening and, more importantly, what you can do about it. The global economy is sending distress signals. The Dow's tumble is making headlines, but it's just one piece of the puzzle. Japan's market is in freefall. The Nikkei's plunge is a stark reminder that trouble in one part of the world spreads quickly. Interest rates here at home are rising. The Fed is trying to tame inflation, but their moves come with a cost. Higher rates make it more expensive to borrow money. That impacts businesses and consumers alike. Even the Oracle of Omaha, Warren Buffett, is proceeding with caution. Buffett is known for his long-term investment approach, but even he's been trimming his stakes in certain sectors. That tells you something. The economic engine is sputtering. We're seeing layoffs, lower consumer spending, and a general sense of unease. While nobody can predict the future, the writing is on the wall. A recession is a real possibility. Warren Buffett didn't become one of the world's richest men by panicking. He's a master at navigating turbulent markets, and right now he's sending a clear message: proceed with caution. What's Buffett doing? He's holding on to cash. He's being selective about his investments, and he's focusing on companies with strong fundamentals. These are lessons we can all learn from. Now's the time to assess your own portfolio. Do you have too much risk? Are you overexposed to volatile sectors? Take a page from Buffett's playbook and consider a more conservative approach. Remember, cash is king. Having a cash cushion gives you flexibility and peace of mind. It allows you to take advantage of opportunities when the market dips. Don't underestimate the power of liquidity. Section 4. Weathering the storm strategies for financial security. The first step to navigating a storm is to ensure your ship is seaworthy. In financial terms, that means having a solid emergency fund. This isn't about getting rich, it's about safety. Aim for at least 3 to 6 months' worth of living expenses in a readily accessible account. This fund will be your lifeline if you lose your job, face unexpected medical bills, or encounter other financial emergencies. Next, diversify your investments. Don't put all your eggs in one basket. Spread your money across different asset classes: stocks, bonds, real estate, and even commodities. Diversification helps cushion the blow when one sector of the market takes a hit. It's about managing risk and protecting your hard-earned money. Section 5. Long-term vision, navigating market volatility. Market dips are like waves on the ocean. They're inevitable. The key is to ride them out, not get swept away. That's where a long-term perspective is essential. Don't panic sell when the market drops. Remember why you invested in the first place. Focus on your long-term goals, whether it's retirement, your children's education, or financial independence. Market downturns can even present buying opportunities. When prices are down, you have a chance to buy quality assets at a discount. Think of it as a sale at your favorite store. Tune out the noise. The financial media thrives on fear. Don't let their headlines dictate your investment decisions. Stick to your plan, stay informed, and remember that time is on your side. Section 6. Take charge of your financial future. Knowledge is power. The more you understand about the economy, the markets, and investing, the better equipped you'll be to make informed decisions. Read books, articles, and reputable financial websites. Talk to a financial advisor if you need guidance. The key is to be proactive, not reactive. Remember, your financial future is in your hands. Don't bury your head in the sand. Embrace the challenge. By taking steps today to prepare for potential economic downturns, you'll be well positioned to not only weather the storm, but potentially even come out stronger on the other side.